afternoon, everyone, and welcome to PBA at noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today, we have with us Millennial Precious Metals, which trades on the TSX Venture under the symbol Mary Peter Mary. Millennial is a Nevada-based development company focused on unlocking quality ounces through the responsible expansion of its 7 gold projects. They plan to accelerate the development of their 2 flagship projects, Wildcat and Mountain View, which currently have an aggregate of 1.2 million ounces of gold oxidized inferred mineral resources. Millennial Precious Metals is led by an experienced management team and board of directors with a proven track record of success in financing and developing mining assets. Joining us today is CEO and President Jason Kozak. Jason, whenever you're ready, please go ahead, and then we'll have some questions for you at the end.
Perfect. Thank you very much for having me on, Paul and Sophie, and thank you all for joining us today. I'm a geologist by background, so if there's any technical conversations, I'm more than willing to dive in the weeds, but for today's topic, to keep it out of the weeds, I'll keep it very high level. Just a forward-looking statement. I'm sure everyone has seen this before. Quick history of myself in the management team. I myself started off with Trelawney Mining and Exploration, which was the Cote Lake deposit. We put up 7.8 million ounces on the board and flipped it to IAMGOLD for $680 million in June 2012. I then went into IAMGOLD's upper management development team, where I toured all of their assets globally. And then in 2015, Sean Ruzin and Eric Sprott, who I'm sure most people may know, they're prevalent people in the mining space, asked me to come to Barkerville to really figure out what the controls of mineralization are. Between my partner Terry Harbert and myself, we really unlocked the controls of mineralization and put up over 5.5 million ounces on the board, and subsequently sold that to Osisko Gold Royalties, which is now Osisko Development, for $330 million. Like I said, I'm a structural geologist with a master's in Earth and Energy Resources from Queens. My CFO has been with us since Trelawney. Ruben Padilla, my other partner, was with BHP Billiton, with AngloGold Ashanti. He did his PhD and found Escondida East, which is over 2 billion pounds of copper. Terry then subsequently was with AngloGold Ashanti, where him and Terry found the Las Colossus and Gramalote deposits, which are north of 33 million ounces. Then we started Talisker Exploration Services, which does all the technical due diligence for the Osisko group of companies. Mike Leskovic is with Northfield Capital, and was previously with Gold Eagle Mines, which was sold to Goldcorp for 1.5 billion, and runs a fund in Toronto with Rob Cundy, which is called Northfield Capital. Most recently to the board is Sarah Heston. She used to run the ASA fund, which is a division of the Oppenheimer family. Now she is a business professor at Stanford. Really, what we really want to do here is build a multi-million ounce, multi-asset development company. And what we are really focused on, and for a number of reasons, is focusing on near surface heap leach oxide type of deposits, and really looking at low stripping ratios. And why we do that is because the capex for these is extremely low, so the payback is very high, and the cost to drill them off and to add ounces is quite low. So your cost per discoverable ounce is quite low compared to other types of deposits that we see globally. Quickly, from our share structure point of view, we currently have 135 million shares out, just over $23 million in the bank. So we're fully funded for the next 24 months. And one might ask, when you look at the share roster here, when you see the likes of Merck and Vescor and Regal and Eric Sprott and Century, you know, these are massive multi-billion-dollar institutions that commonly do not play sub $100 million market cap companies like we are. We're currently around 75 million right now. But I think it speaks miles about the management team and our proven track record, because you would never see a roster like that in most junior companies. And that's why it's 54% held by institutions. 19% is held by Waterton, which is a private equity group. And management holds just over, actually, the number's a little bit outdated, just over 10%. I myself, I've put in over $450,000 into this. You know, I'm a younger person that, you know, spent 10 years in the bush. I wasn't running a hedge fund. So, you know, unfortunately, geologists don't make that much money. So, you know, as a 33-year-old, that's a substantial amount of my savings. And really, what do you get at the end of the day? You get a team who's put up over 59 million ounces of discoveries. And, you know, people talk about proven track records and management teams, but I think the key metric really is that it's across 7 projects, and 5 of them are in construction or in production today. And that goes to show what quality ounces are. You get 7 quality projects, all in Nevada, which is the world's best mining jurisdiction, 2 development stage assets, which is Mountain View and Wildcat, a really exciting story called Red Canyon, which is right in the heart of the Battle Mountain Eureka Trend, just south of Cortez, which is Barrick's biggest deposit. And then a really nice growth portfolio of assets, which are Dune, Eden, Martin Oslo, which I won't really talk about much today. It is a catalyst-rich story, a very tight float. We're going to be putting over 20,000 meters into the ground this year. So consistent news results starting in the next couple of weeks. And 1.2 million ounces of oxide with 700,000 ounces of potential. I'm going to get into the projects now, starting with Wildcat. One of the reasons we really like this asset when we purchased it, and none of these assets have been in the public markets for over a decade, is Allied Nevada previously had it and didn't understand the plumbing system. So where the fluids migrate up, and I'll show you that on the next slide. We have significant high-grade intercepts, 80 feet of 8 grams, 35 feet of 17. So that was poorly understood. And that's kind of what the Talisker team has done in the past. We go into old camps, into mature terrains, and kind of look what someone has missed. And that's how we really create value. And here is another example of that. But currently, the resource sits as a 43101 compliant resource. These are pit constrained ounces. So we actually use economic parameters into the whittle shell. So we use a $1,500 pit shell. The recoveries for the oxide are around 80 to 85%. We use 80 at the low end. We came up with 776,000 ounces, 700,000 ounces of potential, and no strip. You'll see it on the next slide, and a grade of 0.4. And the average grade in the Nevada Basin, the Great Basin, is around 0.38 right, for reference. I don't need to get into Nevada on infrastructure. That is a given. There's rail lines, there's highways, all of these projects. There's multiple mills on site. And what this looks like is the fluid migrates up vertically, and then like such, like a mushroom, comes up vertically. And these high-grade intercepts come from these holes down here. In Allied Nevada, when they had it, their mandate was drill the oxides through the transition, which is the blue here, and then stop the drilling. Do not drill into the sulfides. So commonly, these low sulfidation epithermals have about 500 meters of vertical continuity when the lithocap is left on, like it is here, this yellow unit. They range anywhere from 2 to 10 million ounce deposits. We're sitting at 776 plus 700 potential, sitting around 1.3 right now globally. I would never lie to you. I don't know how big it's getting, but those are the general sizes of these types of things. So the drilling will be infilling in into the pit and then drilling the plumbing system down here to show the high grade and the geometry of the sulfides. It's going to start in the third quarter. It's an 8,000 meter program. That program will then feed the updated resource in the second quarter of 22, which will then feed the PEA in the third quarter of 22. And it's a $2 million budget. For these types of systems, commonly we would look at a central milling facility between Wildcat and Mountain View, or what we would do is we would just truck loaded carbon to metals research. And to give you perspective, when I was with the team, built that for just under $15 million US, and it spits out about 50,000 ounces per annum, and has a blended all-in sustaining cash cost of around $900 an ounce, to give you a perspective of how these things grow. Next is Mountain View. Again, another Allied Nevada asset. And again, same type of system, low sulfidation epithermal, really high grade plumbing system, 70 feet of 6.8, 20 feet of 12.1. The guys in the field just recently found other ones of 1.5 meters of over 1,000 grams. Right now we sit at, again, pit constrained ounces. The recoveries of the oxide around 80 to 85%. We use 80. The strip is a little bit higher at 2. But the grade is substantially higher at 0.57. Here it is very prevalent of what went on. You can see again the blue transition, and the pink is the high grade blocks. Everything above 10 grams. So you can see the drill comes down and stops right when they hit the actual vein. So the actual plumbing system, what's driving the system, is right now you're sitting, like I said, at 446,000 ounces, but the plumbing system has never been these hits and these hits to the two, which will then subsequently feed the PBA in the third quarter. It's a $2 million budget. And again, it's about 55 miles as the crow flies from Wildcat. Probably one of the most exciting assets, and again, I'm an exploration geologist as well, that could be really world-class systems. And I'm saying world-class, something that's north of 10 million ounces. That's something world-class. And what we see at Red Canyon is the exact same geology as what hosts Cortez Hill and Gold Rush and Pipeline, which are, in the 22 million ounce range, more than anywhere else. What the previous company did is they just drilled in this one zone, which we call the Heavenly Zone. And they drilled it with RC, so it just comes up as chips. So what we're doing is we're drilling right now. We're drilling with, and in order to do that, you need to be very use your geological tool chest, and be pragmatic and systematic about it. Okay. Like I said, this is Cortez Hill, this is Cortez Pipeline, this is McEwen all around us, and we're right in the heart of the best, most well-endowed district out there in the world. Okay, the program's $1.3 million. We have 2 more holes, and results will start coming out in the next couple of weeks. I'm not going to go into the criteria. We can do that later on if anyone has questions about the criteria for Carlin style systems, but Red Canyon checks all those boxes, and they commonly range from 300,000 ounces to 20+ million ounces. Myself as a millennial, I think to build our brand, really need to think about tomorrow, today, and going above and beyond from both a social and a governance perspective, to be extremely transparent, be good stewards of the environment, and frankly, I think the whole industry as a whole could do a lot better. And part of the next generation of investors is really changing the perception of what the mining industry is, and how we can have a positive impact on local communities and really revitalize everything around the old existing sites. Quickly, from a comps perspective, right now we have one of the lowest strips in Nevada for oxides, and we're sitting at 0.45. Really, we'll probably get that grade up to 0.57. So making it one of the most, attractively looking deposits from an economic perspective. From a comps perspective, right now on an EV ounce basis, we're probably sitting around 35 on an EV ounce basis. Nevada ounces trade around 60 to 70. So right now, at this level, it puts a peg in the evaluation. You get a significant re-rating opportunity once we start de-risking these ounces, and then everything, all the Red Canyon stuff and all the ounces we add to the board is your blue sky and your free carry. And it's really nice to have a development asset, 2 development assets with some exploration torque to give you really that nice little bit of added juice at the end. From a catalyst perspective, we just went public over a month ago. This year, we've been trading really nicely. We're already up about 15% from the open. We'll start releasing drill results in the next couple of weeks from Red Canyon, then from Mountain View, then Wildcat. Next year, we'll have 2 resource updates. We'll start our Greenfields program on Mar, Oslo, Eden, and Dunn. And then subsequently the PEAs from Wildcat and Mountain View in the second half of 22, followed by the second phase of drilling at Red Canyon. So in a nutshell, you get a quality portfolio in the world's best mining jurisdiction. These are oxide ounces, so low cost per discoverable ounce, which equates to minimal shareholder dilution. So we can focus on share price appreciation, market cap appreciation. You get a strong cash balance, which gets you through the next 24 months, no problem. A team that's put up over 59 million ounces, like I said, a significant re-rating opportunity, and a very strong institutional shareholder base that you wouldn't see typically in any other junior company. And that is all I have today. Sorry, it was a minute over there, Sophie, but forgive me. Any questions?
No worries. We actually have a lot. So thank you, Jason. That was a great presentation. So if you had to say out of your projects, which one is your main focus, let's say in the next 3 to 6 months?
Well, they all are. And the way you have to, to be frank, exploration and development is a risky business. And I look at it as if I'm a portfolio manager, do I make one investment and go all in on that? Or do I make multiple and lower my risk in such a risky business? So when we work for big companies, we do multiple projects and it lowers our risk. So, Mountain View, Wildcat are for sure the development assets because, there's a big push for bigger corporates, Newmont, Barrick, and I-80 and all these other groups, Augusta Group and Bullfrog, to roll up Nevada. So I need to de-risk these assets, Mountain View and Wildcat primarily, put an economic study on them so that I could start the permitting process. Because no company will take you out without a clear visibility to when you can put it into production. So a long-winded answer, Mountain View and Wildcat, because I'm worried that someone in the next kind of year to 2 years is going to make a run at assets like this. So I need to have a study done, and I need to show what the real potential is so that I get paid for those ounces if someone goes hostile and comes after me.
Okay, understandably. So you briefly touched on it. So you're not permitted on the projects. You still have to get the permitting?
So we have our exploration permits.
Okay.
In Wayne, Nevada, what it is they have 5 acres, 5-acre permits. There's a notice of intent. So it gives us enough space to do all of our exploration drilling. And really we'll have to apply for an actual to apply for a mining lease permit, which commonly in Nevada takes about 18 to 24 months.
Okay. So we have a comment here, a very impressive story. What do you see as the biggest problem you're going to face in 2021?
Drilling in Nevada is never easy from a rock mechanics perspective. So slower drilling is going to be expected, but from a mining perspective, that's actually really good because you can just dig it out of the ground and throw it on a pad, on a heap leach pad. So you let less crushing, but from a drilling perspective, it's a little bit trickier. And, frankly, the biggest worry is that if the gold price keeps on moving northwards, there's not a lot of oxide deposits left in Nevada. And the sulfides here are non-refractory, which is even more rare. And the sulfides can leach as well. There's lower, around 55%. So the biggest worry is that I don't do all this drilling and put up these ounces and someone takes a run at me and I can't show how big the thing could be. And that would be, other than, taking a little bit longer drilling, is someone making a run, then I and not getting paid for what's fully there. That's my biggest worry.
Understandably. So how do you actually determine where to position your drills and the number of meters to drill?
Okay, that's a good question. So in low sulfidation epithermals, on the surface, they give really strong mercury, arsenic, and antimony signatures. We can also use geophysics. In low sulfidation epithermals, in the disseminated cap, which where all the oxides are, for inferred, you can get away with 100 or 75 meter spacing. Down in, and that'll get you inferred, and indicated, which you need for a PEA, 50 to 75 commonly. And then once you get into the actual vein, you'll need 50 meter spacings for inferred.
And so you might have mentioned this. Are there any sulfide ore on your property, and have you discovered any bonanza grade or visible gold?
So there is sulfides, but lower in the system. So you see here, erase, let's see. So all of the, let me just get my pen. So the blue you see here is the transition. So the transition means transition from oxide to sulfides. So the sulfides leach around 55%. And the oxides are around 85. Average in Nevada is around 80, so that's why we use it. So the transition is somewhere in the middle. So the Bonanza Zone and these really nice intercepts, like this one, which they never really drilled, is the Bonanza Zone in the epithermal. So right in the boiling zone. And Bonanza zones and low sulfidations get about 500 meter vertical continuity, and there would probably be visible gold. in that, but in the oxides there's none. And you know, there's historical intercepts of 1.5 meters of over 1,000 grams. So unfortunately, I haven't seen that core. We just reran the pulps and the rejects that they had previously run.
So Jason, you also mentioned that you have 23 million in cash, and that. So how long will that last you, and how will you be using that?
Okay, so 23 will get us at least for the next 24 months. And what that will do is this year's drill program of 20,000 meters, it's about $350 US all in per meter. So it's around just over $8 million burn this year. It'll get us the second phase of drilling at Red Canyon next year. It'll do the resources, it'll do the PEAs, and it'll start the permitting process in Nevada. And I have 2 milestone payments left for the, according to the asset purchase agreement. One at an updated resource for 2.5 million US, and then another one at a PEA for another 2.5 million. So 5 million in payments. And then I have 8 million burn this year and probably another 5 million burn next year.
So that brings me to my next question. So you mentioned that you have these payments on the properties. So what is the structure? Do you own the properties? Are there any royalties? Where does that stand?
I will gladly walk you right through the whole transaction. So the assets were purchased from Waterton. So the Wildcat Mountain View, we fully own. This was part of this transaction. What it was $5 million up front and then 2 milestone payments, as I said. The exploration assets that we didn't really talk about, they're conceptual by nature, but they're low sulfidation epithermals as well. There was no royalties on them. So we put a 2% NSR, but I have a right to buy back 1% for 1.5 million, which is extremely rare finding assets with sub 2% royalties in Nevada. The Wildcat Mountain View had a 1% and a 2%, respectively. So I bumped it to 2% and 2.5%, and there's no buyback.
Okay.
Part of the transaction, Waterton then got 19.9% of the pubco. There's a secondary lockup on Waterton. They cannot sell more than 2.5% of their position over 10 business days. If they want to sell more than 2.5%, I have a 10-day window to place that block. So it's not an overhang at all. The other asset is Red Canyon, which is an earn-in agreement, back-end heavy. So we have to put $1.5 million into the ground over the next 4 years, which we've already done this year, or will do. Extremely rare that there was no royalty on it in the heart of the Carlin Trend. So we put a 2%er on, and with a right to buy back 1% for 1.5 million. And basically it's stage payments, back end heavy. So 50,000 this year, 50,000 next year, 75 next year. And then at year 4, if we want to buy it out, it's a $2 million trigger.
Okay.
And then the shell we use, should be noted, is that it was a delisted shell, but it was a reporting issuer. So all the board lots and the distribution that you need to go public came in at 50 cents. So the shell didn't have any kind of legacy shareholders or anything like that.
Okay, good to know. Paul, did you have a question or two for Jason?
Yeah, a couple. With 7 projects, I mean, how far apart are they, Jason? I mean, and how do you manage 7 projects at once? I mean, how many boots on the ground do you have, to take care of that?
So Wildcat and Mountain View are about 55 miles from each other. And they're handled separately. We have our own project geologists we have 2 teams. One is a drill team. So they'll go to they're at Red Canyon right now we have 4 rigs on the ground. And then that drill team will then move to Mountain View. Then the drill team will move to Wildcat. And in conjunction with that, we have a grassroots kind of exploration team that manages all of the kind of greenfields exploration. And, I come from Terry, myself, and Ruben, we come from big companies like Anglo Gold Ashanti, BHP, Iron Gold, Cisco, that we manage multiple projects in a portfolio.
Okay.
And it's just what we do to minimize risk, like I said. And again, looking at it as a portfolio manager, you don't make one investment, especially in a risky business like we're in, or biotech or tech startups. So we have multiple to minimize the risk.
There was another question that came in, like, who's around you? Are there any major mining companies in your area, like, that are
Oh,
doing?
yes. So if we go, let me just, so most of this is all, well, Barrick and Newmont. And then McEwen is all around here. And then Bullfrog and I-80 are around here.
Okay. Now, you've only had these projects for a very short period of time. Is there any, like, previous data that you can look at? Was there any work
Yeah,
that you've done on the
there's
project?
quite a bunch of historical holes for Wildcat and Mountain View. So that's what we use to do the updated 43-101 resource. Because when Allied Nevada had it, Snowden and MDA did it, or MDN did it on Wildcat and Mountain View. And on Wildcat, they had 3.2 million ounces. And at Mountain View, they had, I believe, just over 1.5 million. I'd have to double check. But you know, those were all the historical drilling, and we have our own internal resource team, modeling team. Our internal resource guy used to be the head guy for Anglo Gold Ashanti. So we redid all of the resources using the historical data.
Okay.
And I told them, just give me worst case scenario. I want to sandbag it to the market so I can under promise and over deliver, because I know I have this. I'll show them this so that I get the lift.
Yep.
As an old mine geologist, you know, if I said there's going to be X tons at this grade, well, I'd always put the grade a little bit lower so I'd come up above and I'd look good, and then I wouldn't have to answer questions. And it's the same thing with the resource.
Okay, one last question, or one or two. With 7 projects going, and like you said, one of them you said is 55 miles apart, you're going to be a miner, you're not going to be an explorer, right?
Yeah, you know,
So how do you, sorry, but how are you going to manage with, are you going to build 1 mill, 2 mills, or are you going to?
So very, very early stage, and in Mountain View and Wildcat are the development assets. And we will develop them and put them in production. They're completely in our technical and financial capacity to do so.
Okay.
If someone wants to come out and pay us $150 an ounce, then so be it. I'm fine with that. I'm not going to let an ego get in the way of everyone making money. Commonly, these low sulfidation epithermals that are oxides like this, you know, when I was at Mineral Alamos, one scenario we did was we trucked loaded carbon to metals research in Idaho, and this was in Mexico. And our all-in cost was around $900 an ounce. So trucking loaded carbon and then stripping it at metals research is one scenario, or having a centralized processing facility and stripping the carbon and pouring a doré would be another scenario. Or you could toll mill it, which would be another scenario. And you know, CapEx for those range from, you know, 13 million for no processing facility and probably toll milling it, to, you know, 60, 70 million with your own processing facility.
Okay. One final question. How deep are your holes going to be, and is it going to be open pit in your opinion, from what you said earlier?
So it is right at surface. All of this comes right to surface. So usually what happens in these systems, literally what you do is you take, well, trying to draw an arrow, you just take the top off the mountain. It's an open pit. And then if the plumbing system has a good geometry and is well mineralized, what you do is then from the pit, then you'd ramp down and put a portal in and you go underground.
your drilling program, how deep are you going to go? What's your deepest hole going to be?
Oh, no deeper than 500 meters.
Okay, I got you. Jason, a great story. I really appreciate your time today. I like the name, by the way, Millennials. So that,
Well, I had to wear a millennial on my face, Paul, because I am a millennial.
I think
One
you're
of the
going to
younger-
attract, you have to attract a new audience, and I think you got the right spot. I think you're right there.
Awesome.
I have one last thing to say, and it's just my condolences to all my friends and people in Toronto for last night's loss of the Toronto Maple Leafs. Sorry. I had to get that in. There's a couple of people that are listening, so I just had to put that in. Jason, thank you so much for today. Very much appreciated. If we have any further questions or whatever, we'll follow up with you, and we'll be following you for the next 4 months. One quick, how are the labs with you? Because they're backed up everywhere else.
Yeah, well, again, one thing I've learned in my previous doings is if you have to pay a little bit extra to rush your samples to get consistent news flow to the market, you do that. Because if you don't have consistent news flow to the market and you have holes that are 2 months behind, you're going to eat that in your share price and in your market cap. So I'd rather pay a little bit extra to rush the samples at the lab. So that's what we do. So we're guaranteed 3 to 4 week turnaround.
Very well said. Thank you. I
Yeah.
appreciate that answer. Very well done.
Great way to end off. Thank you very much.
Thanks, Jason. Take care. Thanks everyone for listening in today, and we'll talk to you soon. Take care.
Thank you very much. Take care, Paul. Take care, Sophie. Bye now.